Our knowledge series on corporate tax in UAE. In this video you will learn about the computation of corporate tax. This video covers the following important matters: steps to calculate corporate tax payable, withholding tax credit and foreign tax credit, small business relief, free zones corporate tax rates. Introduction. In previous videos, we have seen how taxable income is calculated. As for the partnerships, we have seen how partnership taxable income is allocated between partners. In this video, we shall discuss about computation of the corporate tax payable, withholding tax credit and foreign tax credit. Below are the key points for tax credits to calculate corporate tax payable. Tax credits are deducted from the corporate tax payable and not from taxable income. As per Article 45 of the Corporate Tax Law, withholding tax is a tax withheld from the state-sourced income of a non-resident person. It is recoverable under Article 46 if the non-resident person becomes a taxable person in the UAE, for example by forming a permanent establishment. The withholding tax is only recoverable in the tax period in which it is paid, and the non-resident person becomes a taxable person in the same period. Where foreign tax is incurred by a resident person on a foreign source income, which is also subject to tax in the UAE, foreign tax credit is given to prevent double taxation. As per Article 44 of the Corporate Tax Law, foreign tax credit is given after withholding tax credit. Steps to calculate correct corporate tax payable. As a starting point, you must use the profit or loss before tax figure from the financial statements as per Article 20 of the Corporate Tax Law. Consider whether any relevant adjustment is needed and if so, whether this needs to be added or deducted, and what amount to adjust. For example, exempt income, non-deductible expenses, non-arm's length related party and connected person transactions. Deduct any applicable relief from the figure derived in Step 2. Such as loss reliefs, transfers within qualifying group, business restructuring relief. Multiply the taxable income by the relevant applicable tax rates. This step is not required if the figure in Step 3 resulted in an allowable loss. Deduct the allowable withholding tax credit or foreign tax credit from the figure derived in Step 4 to arrive at the corporate tax payable. This may result in a refund of tax previously paid. Withholding tax. Overview. Withholding tax is levied on the gross amount of the payment. Withholding taxes are a common form of imposing income tax on cross-border transactions involving non-residents, and in other situations where withholding tax would provide a means of protecting the tax base. In many jurisdictions, withholding tax applies to interest, dividends, and royalties paid to a non-resident person. Withholding tax on UAE-sourced income. According to Article 45 Clause 2 of the Corporate Tax Law, withholding tax withheld on UAE-sourced income should be remitted to the FTA within a prescribed timeline. The FTA will prescribe the processes, procedures, and timeline that will be followed to withhold and remit the tax deducted. Under Article 45 Clause 1 of the Corporate Tax Law, the rate of withholding tax applicable on both domestic and cross-border payments made by UAE businesses is 0% or any other rate as to be specified by a cabinet decision. This includes UAE source income derived by a non-resident person as will be specified by a cabinet decision, unless the income is attributable to a UAE permanent establishment of the non-resident person. Foreign tax credit. The taxable income of a resident person may include overseas income which has already been subject to tax in the overseas jurisdiction. The gross income, that is including overseas tax, should be included in taxable income. Under Article 47 of the Corporate Tax Law, foreign tax credits reduce the corporate tax payable. Unutilized foreign tax credit cannot be carried forward or carried back. Small business relief. It is intended to support startups and other small or micro businesses by reducing their corporate tax burden and tax compliance costs. Under Article 2 Clause 1 of Ministerial Decision No. 73 of 2023 on small business relief, the taxable person must meet the revenue threshold conditions to claim this relief. That is, the small business do not have revenue of more than AED 3 million in the current tax period or in a previous tax period. Revenue is a gross income from sales or services without deducting the cost of goods sold or the cost of services. As per Article 2 Clause 2 of Ministerial Decision Number 73 of 2023, the small business relief applies to tax periods commencing on or after June 1, 2023 and ending on or before December 31, 2026. Under Article 21 of the Corporate Tax Law, below are the two advantages to electing for the small business relief. No liability to corporate tax, as the small business person is treated as having no taxable income. The small business person will have a reduced compliance burden, as they are not required to maintain transfer pricing documentation stipulated under Article 55 of the Corporate Tax Law. However, a person who claims the small business relief remains a taxable person for the purposes of the Corporate Tax Law. Therefore, it requires to be registered for corporate tax purposes, file a simplified tax return, and retain all relevant documents and records to support their corporate tax return. Where the small business relief is claimed by a taxable person, following shall apply. Tax losses incurred in a period in which the small business relief is claimed may not be carried forward to subsequent periods, as per Article 4 of Ministerial Decision Number 73 of 2023. Net interest expense may not be carried forward from a period in which the small business relief is claimed, as per Article 5 of Ministerial Decision Number 73 of 2023. Under Article 3 of Ministerial Decision Number 73 of 2023, following persons cannot claim the small business relief. Qualifying free zone persons. Members of multinational enterprises groups, M&E groups, that have consolidated revenues of more than AED 3.15 billion. According to Article 50 of the Corporate Tax Law and Article 6 of Ministerial Decision Number 73 of 2023, the General Anti-Abuse Rule is applied to the small business relief claims. The authority may make compensating adjustments to the corporate tax liability of a taxable person who deliberately separates its business only to meet the AED 3 million revenue threshold. Free zones corporate tax rates. Under Article 3 Clause 2 of the Corporate Tax Law, corporate tax will apply to a qualifying free zone person at the following rates: 0% on qualifying income, 9% on taxable income which is not considered to be qualifying income under the Corporate Tax Law or any cabinet decision. We shall discuss more details about free zones in upcoming videos. This ends our video session. Subscribe to our channel, and click on notification icon to stay tuned to the series of valuable material that will cover all aspects of the UAE corporate tax. Our partner is available for free consultation who is holder of FTA approved UAE corporate tax qualification. His contact details are provided here. Visit finexcel.ae. Navigate to our clients and testimonials webpage to see more clients' review on our services and our major clientele. Contact us for more detail. FinExcel. We create value that matters.